In 1929, a businessman in New York went to bed a millionaire and woke up with nothing. 20 years of work, gone in 48 hours. But on that exact same day, somewhere else in the country, an ordinary man made one decision that would make him extraordinarily wealthy in the years that followed. The difference between them wasn't luck, wasn't family money. It was one single choice. And you'll know exactly what it was before this video ends. If this is the kind of content that makes you think, hit that like button right now. It's the signal YouTube needs to show this to more people. And subscribe if you haven't yet, because what's coming in the next few minutes is going to change how you see your money permanently. It was October 1929. The world was drunk on prosperity. The stock market went up every single day. People were borrowing money to buy stocks because it was impossible to lose, the experts said. Then came Black Thursday, October 24th, 1929. In a single day, $14 billion vanished into thin air. Banks closed, factories shut down, 15 million Americans lost their jobs. Families who had everything were standing in bread lines within months. And here is the paradox that's going to stop you cold. The Great Depression was the single greatest wealth creation event in modern American history. How is that possible? That's exactly what you're about to understand. When everyone else was panic selling, Joseph Kennedy, JFK's father, was buying. Stocks that were worth $100 could be bought for $3. Real estate that cost a fortune was being auctioned off for pennies on the dollar. Kennedy wasn't smarter than everyone else. He had simply done one thing most people hadn't. He kept cash liquid when everything was good. While others were speculating, he was waiting. And when the panic came, he moved. This same window opened in 2008, the housing crash. The people who had liquid savings sitting in treasury bills and high-yield accounts bought homes and stocks at historic lows. When the recovery came, they were wealthy. The people who were fully invested in speculation, they spent a decade just getting to zero. Practical tip: the opportunity reserve. Beyond your emergency fund, build an opportunity reserve. 5 to 10% of your income every month in a high-yield savings account or short-term treasury bills. When the next crisis hits, and it will, you'll have ammunition while everyone else is frozen. There's a rule the wealthy of the Depression understood that most people were never taught. Real assets survive crises. Speculation without substance doesn't. John D. Rockefeller lost nothing during the Depression. His wealth was in oil, infrastructure, and refining. Things the world would keep needing no matter what the stock market did, not in speculative paper with no foundation underneath it. Today, the logic is identical. Real diversification isn't owning 10 different stocks. It's owning different classes of assets. Real estate through REITs, fixed income through TIPS and treasury bonds, broad equity index funds, and yes, a slice of scarce assets like gold or Bitcoin, which functions as digital gold for the 21st century, finite, global, and independent of the banking system. Practical tip: the 4 pillars. Split your investments across 4 categories: immediate liquidity, HYSA or T-bills, equity, index funds or REITs, inflation protection, TIPS or gold, and a high-risk, high-reward slice like crypto or early-stage companies. You'll never lose everything at once. In the middle of the Depression, Walter Chrysler built the Chrysler Building, still one of the most iconic skyscrapers in the world. Everyone said he was insane, but Chrysler understood something the others couldn't see through the fear. Crises end. The world keeps going after them. It always does. While his competitors were laying off workers and cutting everything in sight, Chrysler was building, investing, and positioning his company for the day after the crisis. When the economy came back, his company was bigger, stronger, and more dominant than it had ever been. We saw the same thing in 2020. While entire industries shut down, a new generation of entrepreneurs launched e-commerce stores, online education platforms, and remote service businesses. Many of them earn more today than they ever did before. The crisis wiped out the poorly positioned and created enormous space for those with the courage to move. Practical tip: invest in yourself now. In a downturn, the safest asset is your own capability. A new skill, a certification, a second language. When the economy recovers, companies hire the people who prepared during the fall. That person can be you. Remember the two men from the beginning? The businessman who lost everything and the ordinary man who got rich in the crisis. That second man was Benjamin Graham, a young accountant with no inheritance, no connections, no special advantages. But he had one discipline the other man didn't. He never spent more than he earned, and he always kept a portion in real, liquid assets. When the market crashed, he bought. When it recovered, he was wealthy. Graham went on to become the most influential investor in American history, the man who taught Warren Buffett everything he knows. Three things separated those who survived from those who prospered: liquidity when everyone else was speculating, real diversification, not imaginary diversification, and long-term vision when fear was paralyzing everyone around them. The Great Depression wasn't the end of the world. It was the greatest financial intelligence test in American history. And the people who passed that test weren't geniuses. They were prepared. If this video shifted something in how you think about money, hit that like button right now. That one tap tells YouTube to put this in front of people who need to see it. And subscribe, because in the next video, I'm going to show you how a broke 26-year-old immigrant who arrived in America with $20 in his pocket used these exact three principles to build one of the largest private fortunes in the country during the worst economic era in history. A story most Americans have never heard, and it will completely change how you think about starting from zero.